Hi, everybody. I want to welcome you back to another edition of Insurance Explained with Andrew Perlin. Over the last few episodes, we've talked a lot about auto insurance and all the things that people need to know about when they're choosing a policy. But there's something important that most people don't realize. Insurance doesn't always fail because you picked the wrong coverage. Most of the time, it fails because life changed and the strategy didn't change with it. So today, I want to zoom out a little bit and talk about why insurance can still fail even when you did everything right. In my experience, there has really been four reasons why this happens. And honestly, most of them have nothing to do with the policy itself. The first one I see all the time is limits don't grow with life. This is very simple. We see it all the time. Your life grows, but your limits don't. The thing you have to remember is an insurance policy is a contract, and it won't change unless you change it. Maybe your income increased, or maybe your home value goes up, or you're building more savings and assets, but your liability limits haven't changed with it. The whole point of insurance is to protect your assets. As these things grow, it's important to make sure that your policy grows with it. And if you don't do that, there could be a coverage gap that could ultimately cost you all the things that you worked really hard for. So again, insurance is static and it always needs to be actively reviewed. This is one of the biggest things that we see. Your life grows, but your insurance doesn't grow with it. The next one I see a lot is actually your coverage exists, but you fail to look at the fine print with all the exclusions that are a part of these policies. This is really why I started Insurance Explained. Someone might be technically covered, right? But the situation they're in falls outside of what their policy is designed for. There is a lot of exclusions, a lot of things that you need to be made aware of. One of the examples I can come up with right now is water. Any time water hits the ground and gets into your house and causes damage, it's called groundwater. Groundwater is another way of saying flood, and homeowner insurance doesn't cover flood. If water comes through your house by the sump pump and you have sewer backup coverage, even though it's technically groundwater, you're going to be covered. Those are the exclusions I'm talking about. If you have a good agent, and I'm sure most of you do, your agent will go over that with you to make sure that you have it. These exclusions, if you're not fully aware of what's going on, matter. There's certain ways to fill them and certain ways you can't fill them with the policy you have. You might have to get another one. So it's not like the policy was wrong or it didn't do what it was supposed to do. It just wasn't built for the real world situation that you found yourself in. And I do see this a lot. And this is usually where the conversation shifts from, do I have insurance, to is my protection strategy actually aligned with my life today? The next one I see all the time is, should my protection be layered, not just increased? So it's very easy for an agent to say, hey, listen, buy the biggest policy that you can possibly get your hands on. This way we're good. Another way that insurance can fail has nothing to do with having too much coverage. It's actually about how the protection is layered. What really matters is how these pieces fit together. Maybe you have solid policies individually, but there's no umbrella policy to tie it all together. Or maybe your liability protection is high on one policy and low on another. Or maybe you bought them at different times and the need at the time was just different than they are today. So these things are good, these policies are fine, but they're not aligned properly and they could create gaps. So this isn't about maxing out coverage, it's about structuring coverage where they're each layered to support each other. Real protection isn't just about bigger numbers, it's about strategy. And finally, the last one that I really see is the human factor. It's no ongoing reviews. And honestly, this is probably the biggest one. People just don't review it, whether it's your insurance agent not reaching out to you and saying, hey, it's time to review your policy, or it's just you who are like, hey, I'm just going to set it and forget it. That's fine if your life doesn't change, but let's be honest, life changes all the time. You may have been single, got married, started a family, got a job, changed jobs, made more money, made less money, need more insurance, need less insurance. A lot of things happen throughout the course of a lifetime. And if you aren't going over this stuff with your agent, things could be missed. When you're going through strategies, make sure to look at this maybe every year to every 2 years at the absolute latest, just to make sure you are accounting for everything that changed. It might not be a drastic change, and you might be perfectly fine today, and then 2 years from now, you're perfectly fine again. But at least you have that peace of mind of knowing that, hey, I did my job, I reviewed it, my agent looked at it, I told her all the things that have changed in my life since the last time we had this conversation, and the recommendations 2 years ago still fits. And if that's the way it is, that's fantastic. But it doesn't always work that way. Insurance isn't meant to be set it and forget it. It's meant to evolve as your life evolves. Sometimes people assume their advisor, their company, or even their system is adjusting to things automatically. But in reality, nothing changes until someone starts the conversation. Like I said earlier, insurance is a contract. Contracts do not change themselves. Contracts are only changed when somebody initiates it. And that's the way you got to look at every insurance policy that you own because they all have limits. They're all limits that were picked at a certain period in time. And as your life changes, those limits most likely needs to change with it. And the only way that will happen is if you start the conversation or if your agent starts the conversation and recommends a change. I remember reviewing a situation where someone had what looked like the right policy on paper. Coverage was solid, limits looked good, everything was really good. Over time, their situation changed. They accumulated a lot more assets, bought a business, and their exposure got a lot bigger than initially thought. Nobody revisited. They just kept on paying the premium and life went on and everything was great, right? Nothing was technically wrong. They had insurance, and if something happened, their insurance would pay to the limit, but would that limit actually fill the need? Will that limit actually protect them? There were still gaps that the strategy hadn't kept up with. Their life changed, but their insurance didn't. And that really is the difference between being insured and actually being protected. So, what's the fix? Like, how do we fix all this? In my experience, it really comes down to three things. First, you got to review your limits as life grows. If your income, assets, your lifestyle changes, your protection strategy should change with it. Good or bad, up or down, it should change with it. Second, make sure your policies are all working together. You may have a $500 deductible on your auto and a $5,000 deductible on your home. Okay, I'm not saying that's wrong, but why is your deductible on your home higher than your auto? Should they be more aligned? Is there a reason for that? There might be, and that's fine. If that's your reason, I got no problem with that. But maybe you should take a look at it. If you have a $300,000 liability limit on your auto and $1 million liability limit on your home, why is that? Why did you pick those numbers? Is that by design or I just got whatever my agent told me to get? More importantly, you might not want to work with one agent for all your policies, but when you're reviewing your auto or your home or whatever, it's important that the agent is reviewing everything at once. Even if you have separate agents, they should be reviewing it all at the same time so you can make sure that your policies are aligned the right way. And have regular check-ins. It's so important that you do that, not because something is wrong, but because staying aligned over time is what keeps small gaps from turning into big problems. I've seen it over and over again. There are people that have insurance. Most people have home insurance, auto insurance, liability insurance, umbrella, life, whatever. It's just not enough, or it's not aligned right. You should have these conversations regularly to make sure that what you have still works. You may have bought that policy years ago, and things change. If you don't change the policy, it's not going to change. So if there is one takeaway from today, this is it. Being covered and being protected aren't always the same thing. Like I said before, you can't set it and forget it. And if you're not sure whether your coverage still matches where you are today, sometimes a simple review can bring a lot of clarity to the table. Like no pressure, just a conversation. If you have any questions that you'd like to ask, put it in the comments. I'm not here to sell you a policy. I'm just here to have a conversation. Thank you very much for listening. I do appreciate it. Please like and share the video. We're getting a little bit of traction on YouTube, Spotify, and Facebook. So if you're interested in talking to me, please reach out. I'll be more than happy to give you my opinion. Again, not a sales pitch, just offering information. Thanks for being here. Thanks for listening, and I'll see you next time. This is Insurance Explained with Andrew Perlin. Thank you very much, everybody, and have a great day.